Hey, Steve and Jamie, what's going on today?
Hey everybody, thank you, Scott. Steve, what's happening over there, my man?
It's Monday as usual when we're together here.
It is Monday, and what an interesting Monday it was after the Friday we had last week. We'll get into that shortly, but welcome everybody to the last office hours of July. Today's the 29th, and August is upon us, and then pretty soon, boom, the summer will be behind us, and we'll be back to, it's a good question. Well, what will we be back to other than the fall? Hopefully some new market highs, but we'll see. All right, welcome everybody. Before we get rolling here, just want to take a moment for the disclaimer here, which all of you regular attendees are familiar with. If you're new, just bear with us for a quick second here, and just want to make sure everyone in attendance is aware of the fact that all the information we present and share with you guys here is for educational purposes only. If you do need investment advice, what to buy, when to do it, when to sell it, all that good stuff, please seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker, maybe. Anyway, there's a lot of licensed individuals that can legally give you buy and sell information. So if you're in the need for that, please seek out a registered professional. Bear with me, ladies and gentlemen. If you hear me go dark for just a second there, it's just because, well, Texas allergies are trying to kill me over here, so I'm going to save everybody all these noises. All right, moving right along. Now, we've got this great scanner, TI Pro, with artificial intelligence and all kinds of good stuff, but we've also fostered quite the community around that technology. So just like to take a moment at the top of the webinars here to let new people that might be in here for the first time know about those webinars, and more importantly, can't say more importantly, but before we talk about the webinars, let's talk about the one, the only trading room that TI hosts and moderated by Mr. Barry Anderson. Been up for years and is growing rapidly, typically 400 or 500 people in there each and every day. The trading room recently got a facelift as far as the software that drives it. So they just got all the kinks ironed out not too long ago, and it's full steam ahead. So the best thing about the trading room, other than the price of $0.00, is the fact that Barry is the moderator there and does a fantastic job at showcasing his trading style, his techniques, using TI Pro, as well as keeping tabs on everybody in the room and making sure it doesn't degrade there. So high quality information in the trading room. Barry's a great moderator, and you know, there are a lot of other good traders in there all sharing their ideas. So if you haven't been taking advantage of that resource, it's in your best interest to do so. Of course, now we get to Mondays, which you get myself and Steve for office hours for the 5 p.m. slot. Trade of the week is tomorrow. Steve's going to take the helm, and Linloff is going to ride shotgun with him. Today, we bring in the founder and Mr. Dan Merkin, along with our Chief Technical Officer, Brad Williams, always entertaining. A lot of the times you get a little peek what's coming down the developmental pipeline, since they get to get their hands on all the new stuff first. Then Thursdays is when we wrap up the 5 p.m. Eastern webinars with Andy's Trading Studio, and I'll be riding shotgun with Andy on Thursdays. Friday support session, ever popular, ever growing, started off at 11 a.m. Eastern time on Fridays, and depending on the crowd, which has been pretty large as of late, even for a summer market, we'll take that bad boy all the way to 2 p.m. Eastern. So the cool thing about the Friday support session is anything is fair game, whether it's advanced things like back testing or brokerage plus, automated trading, all that good stuff, or it could just be simple configuration questions. So anything is fair game on the Friday support session. Now, in addition to the 5 p.m. Eastern webinars, we have TI University coming at you Monday through Thursday. And all of these begin at 12 p.m. Eastern. Monday 101, Tuesday 201, Wednesday 301, and wrapping it up with Thursdays and 401. So once again, starting off at 12 p.m. Eastern, typically go an hour to an hour and a half for these guys. Now, the content remains static here, so it's always the same. So if you do have something getting in the way of attending these live, like a job or something, you can always go to our YouTube channel and watch the pre-recorded or watch the recorded versions. Since the content remains the same, you'll still absorb all of that information. It just we recommend that you do attend them live if you can, because that gives you the opportunity to get your questions answered in real time. So we do recommend that you take these in order, because what you learn in 101, you'll need to build on 201, so forth and so on. So all in all, 9 webinars a week coming at you, so take advantage for whatever it is that you need there. Always just like to give everyone a little glimpse here at how everyone's responded to the introduction of AI, which was way back, seems like a very long time ago. I guess 3 years is, but seems longer than that. Beginning of 2016 is when we brought the first AI module online, the Holly 1.0. And you can see how our user base has expanded since that point in time. And in the interim, we've added 2 additional modules. So we've got 3 different AI modules, all cranking out statistically weighted plays each and every session. In addition to that, Brokerage Plus, since we've introduced Brokerage Plus, which is the add-on that allows you to execute your trades through our Brokerage Plus panel, or automate your strategies that you've developed with our backtester, the odds maker, or whether it could be automating the Holly strategies. Everything is doable through Brokerage Plus, including manual trading. So we just like to show you guys this little chart, which shows how live executions as well as demo executions have been piling up since we released the technology. Clearly on the rise, and with the fall kicking in, expect these numbers to get a lot larger. So what does that tell us? That tells us that people are liking it, right? If you're a user of Brokerage Plus right now, you would probably cringe if you woke up the next tomorrow and it wasn't available to you, because we've made it very intuitive. We like to think it's a little easier than the existing Trader's Workstation with IB, because we've added enhanced functionality to the manual side as well as the automation side. So if you haven't, if you do, you know, have an account with Interactive Brokers and you haven't tried out Brokerage Plus yet, you may want to do that before the fall kicks in, so you can get accustomed to using it. All right, moving right along to today's class. We've got a lot of good stuff to share with you guys. I mean, the market was a little fickle today, to say the least, after our all-time high close on Friday. We got greeted with a little downside to start the day today. So Steve, I guess if you're ready, it'd be a great time to pass it on over to you and take a look at the charts and whatnot. So here it comes.
I'm good at whatnot.
Charts and whatnot.
I can do whatnot. All right, so here is our S&P chart, which we always like to start with. The bottom line corresponds to that prior high, all-time high, also corresponding to a pullback here. The second line is what I meant to say. The second line corresponding to that higher low. So markets are still, by definition, chugging higher, making higher highs and higher lows. And until that changes, there's not a whole lot changing. There's not a whole lot to report that's changed, because nothing has changed. I mentioned, I think starting a couple weeks ago, we talked about it's always possible to just see the summer markets just kind of grind higher without too much correction. I don't know if that's going to be the case this time, but I've seen that happen in summers, and it's typically the type of summer where there's no fear. There's different types of markets that climb the wall of worry, where people are focused on some negative item, but the market continues to grind higher and people scratch their heads. Well, we're not even in that. We're just in all-time high, no upside resistance. The ether is thin, the air is thin up here, and you know, what I'm trying to say is this is conducive for one of those types of summer grind hires where you just don't really get significant pullbacks. You know, something like this might be about the deepest pullback we get in a summer type market. So we still have all of August to go. Typically, you start pointing towards Labor Day, a week after Labor Day, as people get back settled in and, you know, wipe the vacation out of their eyes and start to get back to business. That is what we're typically looking at in these volumes here. These are summer volumes down here as well. So back to my old axiom, there is no bear case to be made. I'm going to keep an eye on this 10-period moving average and this 20-period moving average. I think these are going to be the 2 moving averages that helps guide this market higher, if in fact it does want to grind higher, which it seems to be showing evidence of that. The NASDAQ is very similar in what's going on here to the S&P, because we see the higher lows being posted, and we've got a little consolidation right here. But the good news, or the interesting news I should say here, is that consolidation is grinding and testing 1, 2, 3, another test there today, the low end with a nice bottoming wick today. You know, it's like pulling a cork down underwater and it just keeps bobbing back up above this 10-period moving average. It's about as bullish as you can get. No bear case to be made over here in tech land. I mean, if we do get a significant pullback, we've already tested this prior high and a beautiful 3-day perfect test of the pivot level. Prior high becomes new base camp low support, and build a higher low and move higher. So I mean, if we do happen to have a hiccup in the market or something along the way, I mean, this is the level that needs to hold. It's already proven it once back here, but that's where we are in the NASDAQ. Funny today, and you can't really see it unless we go intraday, and I think Jamie even pointed this out, the Dow was just not playing ball with the rest of them. I mean, here's the Qs, big opening sell-off, pretty ugly there, pretty ugly opening sell-off, and then just a recovery higher. Over in the S&P, not as deep of a pullback, but still a sell-off on the open, and then kind of a grind higher. But then, curiously enough, over today in the Dow, it was like, yeah, what are you guys doing selling off over there? No, I'm going higher. It was very, very odd. But nonetheless, I think I've even said the last couple of times, the Dow daily chart's just pretty. It always looks pretty. Beautiful looking flag pattern here going on. Basically looking like the 20 period moving average is going to come up and possibly force the issue of the Dow, and that would be a continuation pattern. So that's why I draw an up arrow. It's very, very rare to see a pattern flag out like that, only to see the price drop like that. That's kind of unusual. This is typically a higher low, higher low, higher low flag, pennant, whatever you want to call it. Usually a continuation pattern on those. And then lastly, we get over to this crazy screwball IWM. I mean, quite honestly, guys, I really thought that this day back here was going to bring a lot of follow through the following day, but it didn't. It just about face, reversed, found its moving average, picked up its moving average, green candle back up to this level here, which I don't have the number for that level, but it seems to be very significant now after 4 days of kind of moving, grinding sideways. Now, I will say that the good news is it's grinding higher above its moving averages here, and it's doing so in kind of a bullish, kind of a pendant there, rising lows as we get closer. This thing very well could resolve as well, but it's frustrating the hell out of me, to be honest, guys. It's been a couple of failed follow-throughs that I really thought we might have there. So that's what's going on in the Russell 2000. You know, again, if the bigger picture, the Qs and the NASDAQ and the S&P continue to grind higher, I just don't see a way in which this IWM can't find a way to follow. I mean, it's trying to set up here. It's above its moving averages, but it's just in a weird consolidation pattern. So when it does go, imagine the potential energy that's grinding in here. I mean, there could be a lot of energy building up. Potential energy could turn into kinetic energy, to go back to my 8th grade science class. There's that. So before I hand it back to Jamie, I want to point out what I am seeing. Gold is ready to make another move. It's actually trading a little higher. This is the GDX ETF. And I was pointing out to Andy earlier, the GDX Juniors, which is like the IWM for gold miners. GDXJ is even more pretty on the chart. I mean, look at that. A beautiful test today and yesterday of our favorite moving average, the 10-period moving average. And look at what happens when stuff moves higher and goes into a pennant. It has a funny way of resolving in the same direction, a continuation pattern. So there's been a real strong case fundamentally. I try not to get caught up in macro world, global fundamental stuff, but there's been some smart people saying some really interesting things about gold, and this could be the beginning of a real big cyclical move. And if that's the case, we're just going to be students of price action and follow the jump rope here. Move higher, sideways action, a little bit of a dip down, caught the moving average, moving higher. I mean, it's just textbook. It's what I try to talk about every week around here. So gold is on the radar big time. And an interesting name, before I pass it back, just I'll end with RGLD here. This again is chart porn. Beautiful, beautiful riding of the moving average all the way up, and then it finally gives us what? It gives us like 6 days of sideways action. I love sideways action because sideways action gets resolved, when that moving average comes back up into play, and it looks like right at the close here, some good volume, this RGLD is just supporting my theory that GDX, the gold miners, are going to be the next to move. And so the gold miners are made up of components of charts, that look something like this. Newmont was a great trade of the week, had a little bit of a pullback, but it found its legs today, trying to move higher. AU, another beautiful looking chart coming out of that flag there. So there's a lot of internal bubblings going on under the GDX sector. So I wanted to really highlight that. I think that this could be another interesting week of gold. And I'll just leave with this. The Fed is giving us some information, some decisions on Wednesday. A lot of people are thinking quarter cut. Some people are hoping for a half a cut. If the market gets no cut, then this theory, this hypothesis will just completely fall out of bed, just based on what gold does in general with the interest rates and stuff like that. So if gold, if we do get a nice heavy interest rate cut, it's just going to bolster the fundamental backdrop of this theory that's showing good here technically. So that's all I got, Jamie. That's what I'll talk about today.
Good stuff, man. And yes, everybody, Wednesday is the day for the Fed cut or no cut, small cut, big cut, no cut. We'll all wait and see on Wednesday. So just don't forget about that. All right, let me grab the screen back, Steve.
All right.
You should have eyes back on me. I was just like, did I mute myself? Nope, I did not.
No.
All right, so we're all good. All right, ladies and gents, welcome to my desktop. And as we typically do to start off my little section here, we usually talk about, well, we're going to talk about the expectations and what the CC windows were telling us after the first 15 minutes today. Then we're going to get into Holly, which, man, we usually talk about risk on, risk off spread, and it's very slim pickings today. Only one decent example, but after the open that we had, and basically if you're trying to go long in that first 45 minutes, not saying that it was impossible to stick in some trades, but man, you were fighting the whoosh there, that downside swirl that we had for 45 minutes before the market found its feet. And thus, the statistical model known as Holly was going long during that time. Well, I'm getting a little ahead of myself. Let's first take a look at what my CC readings were after the first 15 minutes today. All right, and we can see right here, big negative bias, but today is one of those days, and this happens sometimes, but not typically all the time. If we pull up the SPY chart here we are looking at 15-minute candles, and that's all we had. We had a small gap down, and then for the next 45 minutes, it was just down. SPYs, Qs, everybody was singing the same song and dance here, with the exception of the Dow, as Steve was pointing out earlier. But the bottom line is, maybe some inaction in the first 45 minutes was the best action today, unless you were going short, which, it's catch-22, because, once you see this first candle, you're like, I don't know how I feel about shorts. So, really, unless you just pulled the trigger right off the bat short on the open, it was kind of no man's land here until we got to the bottom down here. Going long was just fighting the onslaught there. However, that's why the compare count readings were so large to the upside, because, to be quite frank, anybody that's been keeping up with these windows, which by the way are all available in channel 4 if you're wondering, this window along with mine, Steve, Andy, and Sean's favorite windows, as well as any of the ones that I point out or take some trades off of and showcase them in a bit here, all of those windows can be found down here on channel 4. And of course, I'd always be happy to drop some into the chat area if somebody needs them specifically, or the cloud links. So that's why we had such big downside bias here, 64%. Just for a point of reference here, typically anything 55% or greater is something that I really pay attention to, but typically we like to see a more tame opening. Gap, not so big of a deal, could be a small gap, big gap, but when we have big movement in that first 15-minute period, a lot of the times it can diminish what these results mean. So ideally, we want less action on the open, or even a counter move. So a lot of the times, if we get 64% downside, the move might be up initially. But in this market that we're in, sometimes we'll get a big downside count, or excuse me, a big upside count. We'll have a little initial counter down move. All right, but what I would urge each and every person to do is just to start watching this window, seeing what the readings are after the first 15 minutes, and over time, things start to make a little bit of sense, hopefully. All right, so we did have the swirl down for the first 45 minutes, and what I'm going to do here is just sort Holly's plotter by time, all right? And we did have out of, let's see here, how many trades did we have total today with Holly? We had 14 trades. If we tally up all the trades from all the different modules right here, we have 14 trades. And you can see if we add up all the results here, you know, basically Holly was down about, we could call it 3/4 of a point, not quite a whole point once we sum all these up. So a slight down day on a low trade count. Nothing to write home about. But when we check out the number of stops, this is a pretty large number of stops for that number of trades. Usually we don't see this many, but of course, if she's trying to go long during that first 45-minute period, that kind of explains a lot here. With the exception of this one here, which was the EIDX, look at when all of these trades were made. Long, long, long. We did have some shorts in the mix. Actually, the first 3 trades were shorts, but even they didn't, not even all of these won. We had 2 very small winners on the short side and then a small loser on the short side. And when we get over here and sort by risk on, typically what I'd like to do is showcase on how we could have extracted some of this spread between what we see in risk off and risk on mode. If there's anybody out there hearing or seeing this for the very first time, just a short clarification here. What is risk off? What is risk on? Well, risk off is simply Holly obeying her trading rules like you or I would do, any sane trader. We're going to have a stop loss, maybe a profit target in there. And if we're using Holly generated trades or odds maker based trades, we might have a timed hold in there as well. And of course, Holly has 2 other audibles that she can use to close out a trade early, which come in the form of profit save, which there was only one down here. Looks like it was a good call, and reduce risk, where if the trade's not moving in the direction that it's supposed to after a certain amount of time, she can close out the loser or the winner early. So as we can see here, XLV, which was an ETF, which we were all kind of scratching our heads earlier and going, XLV is an ETF. It's the healthcare ETF, and the interesting thing about this one is that it was also triggered on Friday. So if I right click here and go to history and see previous trading day, we can indeed, actually correction, XLU was the one that she called on Friday. XLV, honest mistake there. But she started triggering a lot more where, you know, typically it's a lot of equities. But here lately we have started to see some of the ETFs make it into the mix there. So yeah, XLV, actually, Jamie's eyes are playing tricks on him today because look, we had XLU and XLV. I jumped the gun there. So XLU from prior day, XLV from today. In any case, small profits on XLV today to the tune of about 13 cents. And on that one, it was a timed exit. And if we're curious as to what the timed exits are from any strategy, all we have to do is check out the name here, come down here and find that strategy close to across. We had 2 different versions show up today. One a little bit higher probability than the other, but as you can see down here, we can always quickly find the hold times that each and every strategy was designed around. All right, so let's get back up here and take a look at the one decent example of risk off, risk on spread, and it was in the form of Z-Lab. Stretch this out just a little bit here. Here we are looking at the 15-minute candles for today's session. This one later in the day, not till way over here, which let's see, what time was that? 12:29 my time. So 4 hours into the market, we get a buy signal, 35.47 from Holly on this down wick right here. And then what happens? We get some sideways action, all right? And of course, look at the exit reason that Holly used was reduce risk. Why did she pull the plug and call her audible on reduce risk? A lot of the times, if we get flatline action, ebbing and flowing around the entry signal here, that's when Holly is likely to use reduce risk or profit save. In this case, That is the exit reason. Stayed in this trade for a little, just a hair over an hour and a half. Now tailwind designed around 120 minutes. So she cut it about 30 minutes early. And then of course, see what happened pretty shortly after she called it. All right, she gets out for the flat right here, or the penny loser. Now, first off, let's check out the action that led up to her early exit. Nothing wrong with a little sideways action. You know, as Steve was saying earlier, when we do get some consolidation, whether it's on the intraday or the long term, you know, eventually it will resolve itself, whether that be up or down. And in this case, it was up the whole time below the fast line here, but never really acting like it was going to come anywhere close to our hard stop, which is illustrated by the red box down here and this lower shaded area. So, you know, hey, once we see this little wick down here, and then we see these small little wicks hugging that entry line, you know, that can give us the confidence to go, you know what, it's just taking a little bit more time. We could reduce our risk manually if that's what we wanted to do. Once we popped this wick right here, we could have easily said, you know what, I'm going to give this one a little bit more time, but I'm going to manually reduce my risk. If it pops a low from here, I'm going to get out. I'm not going to wait for this to occur. But in this case, that did not happen. So whether you did this or whether you stuck with your hard stop, patience paid off. Matter of fact, in the next 15-minute candle that she closed it, boom, back above the fast line and off to the races. All right. So all we had to do was stay in the trade. And that's us going risk on, sticking to our hard stop or modifying your hard stop accordingly based on what you deem is appropriate on the chart here. So what do we have here? We had a 46-cent spread between -1 and 45. And whether you got 20, 30 cents or milked it for the whole 45 cents into the close, hey, anything's better than taking that -1 loser on a trade that wasn't really acting that scary to begin with here. And typically on any other day, there's at least 2, 3, 4 of these to look at, but just based on the action of the market today, this is really the only decent example of risk off, risk on, and getting some of that spread here. Now, just for something to look at here, since it is such slim pickings here, let's look at that XLV trade today. And she did a pretty good job on that and held that for the duration here, close to across. If you take a look at the exit time here, once again, those are both designed around 2-hour hold times. So she hit this one pretty good. You know, we just had a nice little up move. And let's see here, XLV, XLU. Okay, I'm pretty sure I'm on the, I'm current, and I'm clicking on XLV here. Okay, I was looking at this candle for a moment, but here's the entry line right here, 92.25. As soon as we get that exit, we do take a little shimmy down, but once again, hard stop is way down here. Once this wick gets put in, it was kind of off to the races, kind of hugging that line, but sticking to this upper quadrant here, and then just a nice little push higher for, let's see here, not including the entry bar, 1, 2, 3, 4, an hour. So about 2 hours into it, she calls it. Once again, that's what that strategy was designed around, made it for the entire duration. And had we adhered to the trade or maybe done a little of the 50-50 methodology, which is a good thing to embrace when you're trying to get used to staying in longer than Holly and accepting additional risk, we could have easily plugged out of half of our position with Holly. And this is one that a break-even stop would have kept you in. So a lot of the times we can take that money, just as we do with our manual trades, and go, you know what, I'm going to hang on to the second half. I'm going to use a break-even stop. In this case, there just wasn't much more to be had here. Maybe what, another 5 cents there, perhaps. 4 cents into the close, which is just slightly off here. So maybe 5 cents maximum. So nothing really to write home about, but just another decent illustration. Not near as juicy as what we saw in Z-Lab, but risk on is risk on. Whether it's 4 cents or 40 cents, it's the methodology that we're focusing on here. So just not a whole lot of risk on opportunity, not a lot of trending things today. A lot of shorts were in the money, but if you didn't take them today, you weren't in the money anymore. A lot of longs were in the money today, and if you didn't take that money today, then you're back to flat. Now, as always, there are some continuations, which we'll take a look at here in just a moment, but that's about it for Miss Holly today. Pretty much scratch to down slightly, and we'll see what transpires tomorrow. Let's take a look at the list though real quick here and just count up the strategies. So not every strategy got into the game today. We had 1, 2, 3, 4, 5 strategies that did not even fire, and this is a pretty low trade count for all the strategies that did fire. Everybody had 1 trade with the exception of these top 3 strategies here, spitting out 2, but not even 1 strategy had 3 signals today, which is just a sign that from a statistical viewpoint, there wasn't a whole lot of alpha potential out there today. All right, so moving right along here. Range breaks, the good old opening range breaks, which I love to find using my turbo breaks up and down, and then the modified versions of those, which are the same underpinnings of these 2 windows, but stocks that are either at all-time highs setting up nicely on the intraday, or stocks hitting all-time lows today, setting up nicely. Now, as far as the all-time lows today, not a whole lot of quality coming through that ticker window today. So that one's up on my desktop, but unless I see some green symbols coming through here, which are few and far between as of late, which the green color just indicates that they're the larger cap stocks, you know, I might eyeball them, but these lower cap stocks are a little bit too thin, a little bit too jerky to deal with. So as far as the turbo down family, no support. I only really pay any attention if they're the green guys coming through there. Pretty much the same with the turbo up family, no resistance today. As you can see, I'm just kind of scrolling through here. We got the yellows and the blues. We did have some green guys popping through here that we'll get here in just a second. I believe we had, let's see, what was Holix today? Let me scroll down here just a little further. I'm pretty sure HOLX seems to have disappeared. Let me see if I deactivated that strategy. Okay. Oh, Holix is green. Okay, I was just making sure I wasn't going crazy there. All right, so let's take a look at some of these nice setups today. And I got to say, I was a little surprised to see some of these guys coming through just because of the state of the market. But that just goes to show you, even when a lot of the action is to the downside, we will have stocks setting up nicely and trending higher. So first and foremost, once again, this is being generated from the turbo up family, no resistance. When we look at Holix, what do we have going on over here on the intraday? I mean on the daily? Well, we can clearly see it's just popped out of that little range. It's heading into all-time highs, and it's set up very nicely on the intraday today as well. So 15-minute candles, opening candle, we go sideways for a good amount of time here, and then later in the day, about 11:15 my time, not quite 3 hours into the market, we get this new high with some pretty impressive volume. And let's see, where did my single stock window go? He's hiding back here. Now, first and foremost, how did Holix finish on the day with the volume? Nice, healthy, 50% above normal. Usually pumps out about 1.6 million on the 3-month. Came in almost at 1.9 million today. Of course, as always, relative volume tends to taper off throughout the day. So this was a lot higher back here when it first came out. And then we had pretty sustained volume after the entry signal. But as far as risk goes, this is one of the choicest ones I saw today, because here's the entry candle as it penetrated this high right here. And we're typically just looking at the prior 15-minute candle and using the low of that candle as our stop loss. So we've got a real tiny risk area here. We could probably fit that guy in there 5 times, okay? That's a nice risk to reward ratio. So Holix was a very choice pattern today. What else do we notice here? Not only do we have a nice crisp pattern, we're not chasing. I mean, even at the top of this candle, that would be a little chasey, right? So of course, we always want to get them as soon as we can, breaking that plane. And then what do we have here? We've got our friend, the 10-period fast line, 10-period simple moving average. Just it stuck to that thing like glue pretty much all day. Got a little bleedy right here, but snapped back pretty quickly. So the fact that Holix set up so pretty today and moved higher and finished higher might be one to keep on your radar for tomorrow's session, just because it's strong, first day out of the box, and we never know how many days these things might get up and boogie for. So once again, it's all about risk and how it sets up tomorrow, but just keep that in mind, keep Pollux on your radar. Next, we had LK, and this is pretty much like a lot of them looked like today. We got a big wick up here, kind of ruining the beauty. If we just had the candle bodies here, this would look a lot tighter here, but wicks are wicks. We have to include them if we're playing by the rules here. LK is an IPO from back here, May 17th. Luckin Coffee, which is pretty much the Chinese version of Starbucks, right? Got beat up for a little bit, but now, boom, back to all-time highs. Set up nicely today as it kicked through this wick here, and then just kind of took a nice little hour run up to the top. But as you can see here, not near as pretty as far as a risk to reward ratio like we just saw on the Holix, about a 1-for-1 on this one. Let's see here, not including the entry bar. Here's our stop right here. Risk is notated. So we did get a nice little 1 hour run here before we got this little doji type close. Once we gravitated back down here to the 10 period, that's kind of when the party was over. We just didn't know it yet. But once it got down here, it was really pretty much over. Now you could have held this thing all day and still made a little bit of money on it, but boom, once we hit that point up there, that was pretty much the peak. So, we had 26.47 up to 27.11 there. We'll just call that around about 50 cents or so. Still not a bad intraday move on a percentage basis though. So Luckin Coffee finishing with nice healthy volume, all right? Usually kicks out, well, I don't even know how these 3-month averages are gonna be accurate here, but almost 9 million shares traded hands today. Healthy volume and almost finishing the day at 3. So even LK, depending on what transpires tomorrow in the market, might be one that you wanna keep eyes on or set a price alert. Just by right clicking up here and saying, hey, if this one hits a high today, and if we take a peek at the high, 27.12, we just come in here and set a 27.13 price alert. That way, if it does go up, at least you'll get that alert and size it up, see if that pattern is conducive to get in there and make a trade. So that was LK. What was LK's market cap? I'll have to scroll back on my ticker here. So we got, 7 billion on LK's market cap. What do we have on Holix? 13 billion. Now the next one, I believe, is going to be a little bit lower. Yeah, SNBR is one of the guys coming through in yellow today, which let me qualify what, if you see the yellow ones coming through, like SNBR, they can get up and move and they can be liquid, but always look at that spread. Don't just hit the market buy button. Anytime it's a yellow or a blue one, they might be a little spreadier, right? So always take a moment to check out that spread before you push the button here. Now talk about, the algo's gone wild on the open. It's a little hard to see here, but we had a pretty wide range wick all the way up here to 50.72 and coming back down here about a point in that wick there. So that's why that is the actual high. If I move that out of the way, you can see the top of the wick there. But that's why, if we're playing by the rules, we got to use that wick as the high. Of course, the candle bodies would have made it a lot prettier, but we don't always get what we want here. But the bottom line is, once we got that kick through that high, the volume was there. We can see, indeed, finished almost the day trading at 4 on relative volume. Usually only kicks out about 500,000, but almost approaching 1.5 million today. Good old sleep number, adjustable beds, whatnot. And then to get a nice little push from 50.70 all the way up to right about $52. So once again, not on a percentage basis, nothing to sneeze at. Once again, what do we have in play here? We got that 10 period working like a charm. Didn't get weak until we started coming back down here and testing it and having these lower closes here. So 3 good plays today on the stocks, hitting all-time highs, but setting up nicely on the intraday so we can define our risk. Of course, you can always do that over here, but this is the way I like to do it. If it looks good on the intraday, we've got the added benefit of it being in blue sky territory. So those were 3 good examples that this little guy kicked out today. So all 3 of these probably should be ones to keep an eye on tomorrow, setting those price alerts, 3.91 on the finish there. So all of these guys kicking out really good relative volume. So keep an eye on them tomorrow. Now, we did have some nice setups in the regular versions as well. We'll take a look at let's go ahead and take a look at the shorts today. Number 1, MYL, all right? And this was indicative of a lot of the shorts today because, well, we had the big downside swoosh. MYL, let's see, 1, 2, 3, 4. So after about an hour, right in the hour and 15-minute mark, you know, a nice little break here, nice and concise. We get the push here, right about 2058, capitulated all the way down to not quite a point. So from a percentage basis, not a bad little move here. Profit area is still somewhat larger than our risk, maybe slightly over a 1.0 there. But once we got down to this level here, if you didn't take the cookies, probably coinciding with the market turn as well, well, then it was back to flat. If you held the thing all the way into the close, probably down slightly here, but we have to adjust to what the market is doing as well. You know, we can see over here, once we bottomed out down here, butting up perfectly with this little area down here that used to be resistance, now acting as support. So a decent little trade on Myland with a nice crisp entry and low risk there. It's just not very long lived. Now, completely different than this guy. This guy behaved a little bit better. And when you talk about a beautiful little consolidation period here for quite a lengthy amount of time here, this one made it almost 3 hours, nice and tight. How did it finish? By the way, how did Mylan finish today? Ooh, 13.83, all right, on relative volume for Mylan. So nothing to sneeze at there. And then FTV having really excellent closing relative volume and just a beautiful chart all the way around. I mean, it's hard to get a better setup than this on the intraday. So I don't know how my high line got pushed up above there. You know what, we're not even going to bother. I think it somehow associated it with this text here. But the bottom line is this line is perfectly aligned and we get the push coming through here. Relative volume was high on this one as well as all the smaller time frames during this push. So we get the signal here around about 77.28 and we get all the way down to about 76.28 there. So a nice little percentage swoosh down there. Gave you plenty of time to go, you know what, I think this thing might be done. Came to a cold stop here. Little green bar, even here, you still had plenty of time to exit before this thing got back up. And even if you held it until the close, you're still up a considerable amount, but down here is where the low-hanging fruit was. So as far as the downside guys go today, few and far between, hard-pressed. Quality like this was hard to find because of that 45-minute swoosh that we had on the open, but they're always there. It's just about being patient, waiting for the right setup with the risk in place. Now for the upside version of these guys, which came from this guy right here, got a couple of them. COLM. Once again, here we have this wick kind of screwing up the beauty of had we have gotten it down here, but we have to play by the rules since that is the official high. COLM, what do we notice about the volume? Closing volume, 2.26 on the relative side, cranking out 452,000 shares when this guy usually only kicks out a little over 300,000. So we got that nice range break right here, followed by a nice little push. Never acts like it's going to stop us out. We got the 10 period doing its job as well, and volume on this little guy was pretty high most of the day as well. And you know, whether you took the cheese up here or whether you said, you know what, this one feels good, I think it's got a higher move in it for the day, maybe doing a little bit of the 50-50 that we talk about with Holly, which you can't ever go wrong, ladies and gentlemen, because you have to appease the little demons that sit on your shoulder every day, and it doesn't really matter how long you've been in the chair, 2 months, 2 years, 20 years. Fear and greed are always going to be there, right? So when you're in a winning trade and you want to take that profit, maybe do a little bit of half. Use that break-even stop. Break-even stop on the second lot would have kept you in this one all day to enjoy that without the fear of turning your winning trade into a losing trade if you knock out half when the getting is good. All right, because sometimes they trend, sometimes they don't. Sometimes the chart looks beautiful, sometimes they're at all-time highs, and you think they should trend, but they don't. And using that 50-50 methodology is not only good for Holly, but in any of your trading. All right, so Calm was a great little upside mover. And then here we go with Sony and the PlayStation guys. A very nice risk to reward ratio in Sony today. So not really a true range break, all right, since initial highs were down here, so the first one would have been here, but the volume wasn't necessarily kicking at that time. We do a little sideways dance here, establishing this nice little consolidation pattern, and then volume picks up, which, you know, that is a crucial part of these windows. We're not just looking at random stocks hitting highs and lows. You know, we're looking at market cap. We're also looking at volume on the lower time frames with a little bit of relative volume in there as well, so that we don't have to look at a gazillion things coming through here. And this is where the volume kicked in on Sony as this little plateau was broken right here. And then, as you can see, using that prior 15-minute candle, I mean, he had really small risk here, no stop out, and then boom, off to the races. You could probably plug that little area in here at least 5 or 6 times. So as far as risk to reward went today, Sony was one of the best ones that I saw out there. And of course, what do we have? We had higher than normal volume, closing at 2.66 on the relative side. Sony usually kicking out 1.5 million, almost did double that today. In the relative sense, it did, but almost in the true share count as well, approaching 3 million shares today. So a couple of good examples of some nice crisp range breaks up and down from these guys. And then we even had the added benefit of having 3 that are exhibiting the same pattern that just happen to be breaking out to all-time highs and be in blue sky territory. So we deal the car, or we analyze the cards that are dealt to us today. And even though the deck wasn't too kind today, spitting out less quality plays today, they're always out there. The key is just to be patient, stick to your guns, make sure that risk is tight and it's acceptable. And, you know, through that process, you will find good setups each and every day. So I do believe that's all I got for the session today. We're going to finish up a little bit early, but only about 5 minutes. So Steve, anything to add to the mix before I turn it back over to Scott?
No, I mean, you covered it earlier on the, if you sorted your Holly AI way back in the program, it was kind of giving us a directional bias holding of our hands. You know, you could sort it up by clock, by the entry. First 3 trades today were short. And as I was showing on my screen, you know, the first few 15-minute candles of the day were hitting short pretty hard in the S&P and the Q. So, you know, I try to just also keep a big 30,000-foot view on the AI, and it was giving us a directional bias for the first 30 minutes for sure. So that meant if you were coming in getting ready to be long and buy something, you know, you can use that indicator. You can use Holly, the AI, as an indicator and look at it and say, oh boy, you know, just for the moment, I'm going against the grain here of statistical probabilities. But then all of a sudden, we had a reversal and Holly started picking up some buys. Well, that can be the moment in time where maybe you start paying attention to your watch list that you're looking for today, your shopping list of things you might be interested to go along with. So just another way to look at the AI.
Right, and I mean, look at the correlation here. 45 minutes into the open, from that point on, all she did was go long. This is 45 minutes right here. So, you know,
how about that?
You know, exactly. Hey, and I see your comments there, Waleed, on using Barry's method for the AI. And, you know, once again, another great reason to get into the trading room so you can hear Barry's method on the AI. And, you know, on that same topic, Waleed, I've been wanting to talk a little bit about that in one of the office hours webinar. I'm just wanting to accumulate at least 1 more week's worth of data before we go attacking that, because it's in a nutshell, without giving too much away, it's about using prior AI picks and monitoring them moving forward, which is also going to filter down to our new functionality that's in the developmental pipeline for the AI about monitoring things on a longer time frame. In other words, swing trading Holly, right? As you all know, Holly starts over at the end of every day. So all you see are intraday plays, but coming down the pipeline, hopefully sooner than later, we'll be able to track swing trading and longer term plays in Holly as well. So exciting stuff coming down the pipeline. Hopefully it gets here sooner than later. I'm hoping before the fall kicks in, but we'll just have to keep our fingers crossed there. All right, Scott, if you're ready to walk us out, let everybody know how they can save a little bit of cash, whether it's through a new subscription or an upgrade. We are ready for you.
Yeah, right on. So just a couple other items before we get to the code. We have a new series of ebooks at trade-ideas.com/setup. They're free, so go to that webpage and put in your email address to get the downloads. There's 3 books, 2 chapters each arranged by topics, and Jamie and Steve both contributed chapters, so do check them out. We've got podcasts. We just released an archive, a great one with Michael Noss on Friday, so you can get that by subscribing to Trade Ideas Podcast, by searching for Trade Ideas Podcast in your podcast app and getting the download. And then you're ready to get the next one on Friday when we usually release the new ones. If you have any questions, email us info@trade-ideas.com. You can follow us on Facebook. It's Trade Ideas Pro is the handle there. You can follow Steve Gomez on Twitter at TodayTrader and Jamie Hodge is at QuantBot. We also have at Trade Ideas and some other handles, so check everything out. Follow us, like us, and all that good stuff. We're going to have the recording up later on tonight or tomorrow morning, so stay tuned for an email tomorrow with a link to the playlist. And thanks everyone for attending, and thank you guys for hosting. Have a good one.